Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin. And 15 million of those are in the hands of what we call strong hands. They're not weak hands, they're strong hands. They haven't moved their Bitcoin in roughly half a year, and we can monitor this. So 15 out of the 19 and a half, and the number of Bitcoin ever that will be created is 21 million units. Again, I think you're going to start to see scarcity value playing a big role here.
The introduction of spot Bitcoin ETFs in the United States is poised to unlock unprecedented opportunities for both institutional and retail investors. This development provides a more accessible and regulated avenue for participation in the growing Bitcoin market. Industry analysts anticipate that the approval of these ETFs will not only catalyze a surge in institutional capital flowing into Bitcoin but also potentially propel its value to new all-time highs, solidifying its status as a legitimate asset class. While the exact launch date of the ETFs is expected to be Thursday, January 11th, investors and Bitcoin enthusiasts are eagerly awaiting their debut on major stock exchanges. The anticipation revolves around the projected impact on market dynamics and investor sentiment. Cathie Wood, the CEO of Ark Invest, one of the companies granted ETF approval, expresses her excitement about this milestone. She emphasizes that this marks the beginning of something greater than Bitcoin itself. Cathie Wood is bullish about the development and remains optimistic that the SEC will continue to be cooperative. Let's now join her in the video for further insights.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The price has moved up. It's been an anticipatory move, I think. Many people have been saying there's going to be a sell on the news. This is up too far, too fast. And that very well could be, but I don't think it's going to last very long because this is the SEC's green light. And there have been institutions waiting on the sidelines. They were not going to move until the SEC blessed this. And we've had a lot of our clients and the gatekeepers were not going to allow Bitcoin, even what we did own, GBTC, they would not allow in portfolios until the SEC blessed it. So I do think this is a big moment, and I do think that the flows are going to help us demonstrate that there's real scarcity value here. Because you've got Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin. And 15 million of those are in the hands of what we call strong hands. They're not weak hands, they're strong hands. They haven't moved their Bitcoin in roughly half a year, and we can monitor this. So 15 out of the 19 and a half, and the number of Bitcoin ever that will be created is 21 million units. Again, I think you're going to start to see scarcity value playing a big role here. A lot of retail holders did not want to go through the friction-filled process, or they were discouraged from it, to get a wallet and figure out custody and all of that. This is going to simplify all of that. It's easy access. And I think a lot of people are waiting for easy access. The early adopters are there, no question about it. And yet we believe this is an asset class that will scale to billions of users. I think in the United States, there are 50 million. I don't know. I think the estimates for around the world, 100, 200 million. We think this is an asset that it is the financial superhighway that the internet finally is accommodating. When developers built out the internet in the early 90s, they did not put in this layer because no one ever thought that financial services or commerce would take place on the internet. It was just a place to exchange information. And even in the 80s, it was illegal for consumers to use the internet. So we were coming from there. And now, of course, we do all kinds of things on the internet. This is going to simplify, take out a lot of middlemen that are they're really to control risk, but also they take a toll. This is much more of a peer-to-peer network. So we think there are going to ultimately be billions of users on this network.
The SEC's decision marks a substantial shift in regulatory stance, indicating a growing embrace of Bitcoin and a heightened level of acceptance within the traditional financial realm. This approval is anticipated to serve as a catalyst for future developments in Bitcoin-related investment products, potentially unlocking opportunities for a more diversified range of financial instruments based on Bitcoin for investors. As the SEC finalizes preparations for listing the first spot Bitcoin ETFs, market participants are eagerly anticipating a new era in the investment landscape, characterized by the mainstream integration of Bitcoin into portfolios. Cathie Wood provides her insights on how the ETF approval might impact investors. Let's listen to her perspective.
One of the most important proof points for Bitcoin happened in 2023, whereas before most investors thought it was a risk-on asset. It would do well in strong markets. They never thought it would do well in crisis-prone markets. And of course, in 2022, there was all kinds of crisis, and it didn't do well. But what happened during the regional bank meltdown in March of last year? The regional bank index, the KRE, was imploding. Silicon Valley Bank, Signature, Republic, other banks went bankrupt. Bitcoin went up almost, I think it went up 40%, right in the middle. What did that tell us? It tells us we have not only a risk-on asset here, but we also have a risk-off asset. And that spoke volumes to us. In fact, we got converts. Now, leaders of financial institutions call it a flight to quality. We would say a flight to safety. And why do we say that? There's no counterparty risk, unlike in the banking system. The counterparty risk is what caused the 08-09 financial meltdown. Fear of counterparty risk, once again, caused the regional bank crisis. With this fully decentralized, transparent network, there isn't counterparty risk. So we are now saying Bitcoin is not only a hedge against inflation, given its scarcity value, but it is a hedge against deflation, given the lack of counterparty risk. The value of Bitcoin, the first global, digital, decentralized, rules-based monetary system in history, that is a very big idea. When we did our research, our first white paper in 2015, could Bitcoin serve the three roles of money? We invited Art Laffer to collaborate with us. He is a famous economist. You probably know him for the Laffer curve. He's also a monetary scholar. His mentor was Robert Mundell, who won a Nobel Prize for monetary theory. And when he finally figured out what this Bitcoin was, he said to me, I've been waiting for this since they closed the gold window in 1971. A rules-based monetary system. Monetary policy is unhinged right now. This is a rules-based monetary system. I said, wow, that sounds like a very big idea. Remember, this is 2015 when Bitcoin is $250. How big of an idea is this, Art? Well, how big is the monetary base? At that time, it was $4.5 trillion. Now it's $7.7 trillion. This is a very big idea. Right now, Bitcoin's market cap or network value is a little over 800 billion. We think it has miles to go. The scarcity value of institutions pushing in, now that there really only are going to be 1.5 more million Bitcoin minted ever, is going to be quite provocative.
Experienced trader Peter Brand holds the view that the anticipated approval of spot Bitcoin exchange-traded funds is likely to follow the classic buy the rumor, sell the news pattern. He bases this perspective partly on the enthusiasm of Bitcoin maximalists eagerly awaiting the approval and draws from his extensive experience as a pro-trader in traditional stock markets. The buy the rumor, sell the news strategy involves purchasing a security based on speculation about an upcoming event and selling it when the event is officially announced. In a post on X, Brandt discusses two observations. He notes the irony of Bitcoin maximalists being seemingly unfazed by the potential influence or interference of the government in crypto markets, considering that one of Bitcoin's core values was its independence from government control. Brandt questions why Bitcoiners now view the SEC and ETFs as saviors of their financial future. Despite the hype around ETFs propelling Bitcoin to its highest USD value in almost 2 years, Brandt likens the current scenario to a guide followed by seasoned traders. According to this guide, when the average person is eager to get in, it signals to experienced traders that it may be time to exit. However, Brandt acknowledges that his observations could be incorrect. Responding to Brandt's post on social media, some users expressed disagreement. One user, Abel Chris, argued that if the SEC approves 10 or more spot Bitcoin ETFs, the direction of the crypto asset's price will likely be upward. Another user, Christian Pelushi, suggested that Brandt's assertions about ETFs may only apply to the average European or American individual, as people from other parts of the world view ETF approvals as a non-event. They value access to a parallel financial system that protects their savings from the devaluation of local fiat currencies. What are your thoughts on Peter Brandt's perspective? Share your opinions in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.